This is Damon Stevens with Finwell Builders. Today is Tuesday, October 4th, 2022. This stock market update for trades of the day. Hopefully everybody enjoyed your day and had a great positive day as the market continues to rally and the bulls are keeping us going. We do want to talk about some important things in this topic here. And you notice I placed one of my screens right on my front screen, so it at least gives you another visual of what's going on in the marketplace right now, which is very good. But also, the last time we rallied, we only rallied like 3 to 4 days, depending on what what stocks you're looking at. So be real careful out there. Make sure you're locking in profits, and that way we can make sure that you continue to stay profitable in this market as it's nice and choppy, and obviously can very well come back down again. So as that said, let's kind of get into it, take a look at what's going on in the market and how do we prep for our next day. Looking at the Dow Jones, it closed up 2.8%. NASDAQ up 3.34%, and S&P 500 up 3%, 3.06. So just a nice rocket ride and a huge gap up. I mean, if you're trading futures, you got 100% on your money this morning. If you're trading options, it's just incredible. And then another 100% today. So just incredible if you're trading options on money. Just great opportunities out there in the marketplace. But if you're looking at the chart here, you can see the map is green across the board, just bright green. So really, really good day. We had some small caps come into play. Did not play these today. BTB and SMTI, both of them, low volume on SMTI, but BTB high. But this is one that I don't trade typically when it's that low under $1. But hopefully, if you did, you took advantage of that. That's one of the things that's great about this scanner. The scanner's free, and it posts pretty well in the morning for most of you, even if you don't have a paid subscription. Paid subscription will get you a lot more detail, but you don't. I'm just trying to show you that you don't have to pay. It's all free, and it's ideas every day. So I'm using a different chart tonight than I usually have. I really like some feedback. If you like this format better than the charts I've been using, typically I use deviation bands. I think it's helpful for most people who are new to trading to kind of see where boundaries are in the stock market, and that there is boundaries that a lot of those computers use to trade within. And just kind of wanted to show that. But this is a different view. This is more of a trending view. I use different techniques and different tools depending on what I'm trading, and just wanted to give you another view and get some feedback. So if you like this one better, I can switch all the charts over to this view here. And if not, then we'll just continue with the deviation bands because it is helpful in explaining kind of where we're at in regards to hitting the next threshold. But that said, here's the S&P 5 or the ES 500, S&P 500. This is E-mini futures. This is live 24/6. You can trade this pretty much 6 days a week. And you can see here that the stock just continues to stay above this 20-day and the 50-day and the 200-day, and just kind of grinding up here all day, all night. So now we leveled out a little bit today, so it might be a little bit taking a rest. We hit 3808, and so it's going to have to consolidate maybe here, and then hopefully get a bull flag and break out towards the highs. And we'll talk about that here in just a second. But definitely wanted to show you how the futures is going right now live. So here's the E-mini futures, and this is going back to June, where we hit our last low, to now where we hit our current low in October. And this looks like you're probably getting a double bottom put in here possibly. So we'll see. I mean, the market is more bearish right now than it is bullish. But we'll see if this wants to follow, and maybe break out. So this was our little rally that we had back in August. And so the high here is 43.2750. You can see here we're just kind of coming into resistance area up here. I have this marked out. We're not there yet. So 38.8075 is what I've marked out here for resistance. And that's kind of this area here that we consolidated out before breaking up to this high. So that's kind of where we're at. And this is on a daily chart. The first chart I showed you was on a 10-minute chart. And so you can see that they're a little bit different. But again, this is what you're seeing this last 2 days is what you're seeing on that 10-minute chart. So we'll see if we can continue to crank up here, at least another day to 38.80 in that resistance zone. It may not happen. It could pull right back, But last time we rallied up here, we got a good 3 days. So maybe we can get another good 3 days. Back here in June, after the low, we had a good 4 days, and then we had a pullback, and then we had 3 days and a pullback, and then we had a rocket ride. So we'll see what happens, trade day by day, but that's kind of where we're at right now. Looking at, so this is a daily chart, the same stock, right? The E-mini futures, and this is using deviation bands to show you kind of the boundaries. Typically, the market's going to trade in within ranges here, and so you can see right now this is kind of where we're at. And here's a downward trend. So this is where the first resistance area is. If we break that, then we have a trend line down here off these two pivots. And this would put you around the 100 moving average. But right now, we're just trying to break that 20. So that's kind of the first goal on the list here. Also, if you look at S&P 500, all the stocks, all the companies that make an S&P 500, if they're above the 50-day moving average, that begins to be bullish for those stocks. If they're below it, it's more bearish. And we talked about this. And things are falling like right in line. It's amazing, the trends that you see here. But back here in June, we hit the low, and we stayed about around 7 days, 8 days, and then we bounced out and we gapped up and we kind of chopped along, and then boom, we had a rocket ride. And we went to 92.4, which 92% of companies over the 50-day moving average is huge, because look at that, the average is not that in the past. It's in the 70s, and we hit 90. Over 90. So that was incredible. But look at, we pulled right back down in that same area that we were back in June. And we hung around here, we're at 2 forces in about 7 days, 8 days. Same thing here. And then what did we do today? The same thing we did in June. We gapped up, and we've gapped up. So now the question is do we kind of chop along up and down in a range with the stocks going up and down every single day, and then finally bounce up a little bit higher, come back down, check back in this range, and then boom? Or do we just continue to fall out? That's the question I have. But we are seeing it. We can see the stocks trying to get back to that 20-day on this 50-day moving average. I don't put a lot into these moving averages here. More or less, it's more about kind of where companies are falling. And just wanted to, use this as an example. But you can see a nice day. I mean, we went from 2% of companies over the 50-day moving average now to 20. So that's a huge increase. So we'll see if we can keep that up and keep rallying back up there. But just want to show you this, example here of, what happened in June and what's happening now. And so this is E-mini. This is a different view. This is a monthly view. And this is 2006 and 2006, 2007 to 2008 crisis. And I just want to show this because I'm watching this and I'm watching this really careful to see what happens. Make sure we're not repeating history. Because you can see here, 2000, end of 2007, 2008, we came down onto the 20-day moving average and broke and just tagged the 50, but stayed here the 20-day, kind of rallied back up a little bit. And then we fell back down below it, and then we hit the 50-day and then stayed there for a few months and then tanked down lower. This is the chart that I can see in if you're looking in history that matches the closest. So here we're 2020, rally up here to the top, to the highs here into January 2022. We pull back down, and we're now kind of go down to the 20, and we're down here right now. We kind of tagged that 20, and now we're rallying off that 20, where we rallied off the 20 here, but another good month after that, and then we tanked. I don't know that that's going to happen. I can't say that it will, but I'm watching this, and I'm keeping this chart up because I'm just curious to see, can we, really get out of trouble here, or do we have more pain coming down the road? And you've seen the news come out, of basically saying that we're going to continue pushing forward, and that they're not going to give up on raising interest rates. But you've heard other countries now are concerned, and they're working with their banks. They're trying to keep their banks solvent, and they're trying to make sure that they don't fall through the hole of their economy because of raising rates. And so actually they have banks that are decreasing their rate increases. So do we get that here too, or are we going to there's a Fed's going to take a hard line. No, that's to be seen. But I can tell you right now, if you look at institutions, we're at record number of institutions that are shorting the market. So they're buying these put contracts in case the market does really tank. And so look, it's higher than it was in history, at least since 2020 or 2000, year 2000 to 2022. So we're at the highest level of people shorting the market. And if you look at mid-year elections, sometimes this, this is just an example of averages over a period of time since 1946. And you can see typically that you can typically see this pullback in September, a rally to the mid of October, and then a dump through November, and then hitting lows, and then starting to climb out, and then obviously having a nice rally at the end of the year. Can we get that? That's to be seen. Do we follow the average, or do we not follow the average? That's what we're looking for right now. But this just gives you at least some ideas of what to look for. Make sure you are planning well, that you're taking profits, that you know when you should start adding to your long-term portfolio. And these bottoms are perfect opportunities. I mean, you see some of these companies like Nvidia, Apple, Netflix now, all of a sudden, you see these stocks that just got beat down, really beat down hard. And it's great opportunities to, pick up stocks at a discount. Because, down the road, maybe it's 3 years, 5 years, it's hard to say, stocks are going to be back up again. And if they're going to be back up again at highs, then, you're going to be very profitable. So great time to pick up discounted stocks, not giving you financial advice, but just, average, ease in. It's what I'm looking at for the long term. And obviously, can we come down and make new lows? Well, if we follow the charts, we do have new lows ahead. If for some reason this year is different, or this time is different, then we could rally out of here, as we were seeing on the earlier charts. So just be careful when you're trading out there. But kind of looking at the rest of this week here, we have initial jobless claims coming in, continuous job claims on Thursday. That's probably going to be the biggest thing, and then Friday, non-farm payroll. If something's going to move, it's probably going to be move on Friday, unless we get some news that gets thrown out there. Because if we get some news thrown out there, a lot of times that'll move the markets as well. So just be aware of that. Friday is probably our biggest news, at least that we have scheduled. Definitely subscribe to our channel if you have not already, and that way we continue to bring these videos to you. And if you find them helpful, please like them and continue to subscribe. And if you're interested, going beyond just what's on our YouTube channel on FinWealth Live, we have a website called finwealthlive.com. On there, if you're just curious about joining, there's a free non-member chat and daily watch list that you can click on that link, and it'll give you a link to it, where we post the numbers before we go live in the market in the morning, so that you can know what we're looking for, what we're looking to trade. And that way, we can start to participate. And then if you're interested in learning more, you can click on this link on this video on the front page. That will give you a little bit more about our organization, our company. And also, if you go to FinWealth Live and you join us, this will be the dashboard you get, where you have a link to live training courses, and master course, including some trainings that teach different techniques of trading, especially for those who are new, trying to figure out, what type of trader they want to be. There's some great helpful courses out there. We have group training and one-on-ones. And so one of the things on our one-on-ones that we've done is looked at people's, setups on their phones or their computers, see how they're trading, and see if we can offer some suggestions on how to improve their trading. So just some helpful things out there if you'd like to come and join us. Now let's get into some charts here. First, solar, finally breaking out today. We talked about this. We've been consolidating for a while, waiting for this breakout to happen, or a breakdown. And it looks like we got this breakout. We held it today, which is good. Seeing if we can, keep this, and if so, the next level up here is 151 and 156. So we'll see if we can hold this for a couple of days, and so maybe we can get a run at some new highs here on First Solar. Netflix, still in this channel, but still grinding up here. We talked about this, it's been grinding for weeks up here, and we're okay with that. Really love to give it above, this resistance here at 241. So we can get a run at that 200-day moving average, but for now, we're just kind of slowly, just kind of back and forth grinding up. So if that works for you, this is working well for us to, just to continue to, as long as this doesn't, reverse on us. But right now, Netflix is hanging in there and just giving us a slow move. Microsoft pulled down those lows and bounced off yesterday. And then today, just huge gap up back over the 20-day. I don't know if that's sustainable unless Microsoft really did put a low in. This was just kind of beating it down, getting in positions here, and now you got your market makers and you got all your hedge funds and institutions maybe buying clear down here at the low because they want to sell high and buy low, and so here's a great time for them to buy at the bottom, at new lows, and so maybe we'll see, get back up here in this area, and then probably you'll see them taking profit again and then drive this back down again possibly. So we're just something to be aware of, but right now it's looking good. If you're in on this trade from that bottom, just make sure you're locking in profit, especially if you get up to these resistance areas, around the 50-day moving average at 256 or this support line here at 260, which is resistance right now. Tesla has had a couple bad days, gap down. It's not filled that gap. You see an empty gap here. Consolidating down here, it's engulfed. So we'll see. It might just trade in here for a ways and then try to find either support to break back out and fill that gap or break down. But here's their trend line, lower trend line off these pivots. So hopefully the Tesla will hold above this, so it doesn't show additional weakness because it is below the moving averages. Apple, again, we talked about this. We came down here, hit that new low, and I didn't put a line in here. We're going to put a line down here now that we kind of bounced off that line here. So we'll see if we can, keep that. So there's a higher low, which is good. And we're coming up here, and you see last time we came up, we kind of tagged this line. So we have this off the pivots. So, we could get resistance when we get back up here into this little corner right here, which is around 151, 152 area would be that area of resistance. So we'll see if we can get that far during this rally. If so, just know that we could get a possible pullback here on this little downward wedge. Nvidia, nice little, after making those lows, nice gap up. Sit right over the 20, couldn't make it over the 20. So we really need to get, above this 133 area to kind of rally up here. If we get above 133, then 140 is the next level, and then up here to the 50-day moving average at 147 will be next. If not, we could break down and retest down here off this lower trend line. But right now, Nvidia is trying to rally with the rest. Looking on a weekly chart, we talked about this, several times as well. Nvidia came down right kind of to a major threshold. If it dropped through here, we had this huge movement down to the next support level. We really didn't want to see Nvidia come down to $72. So we held it. It's bounced off of it. We'll see if we can hold it. But you can see that we are in a downward trend line here. So we've got to break out of this trend and make a new trend to the upside at some point here. But on a weekly basis, Nvidia is still just trying to make some good moves here. Look at the 10-year yield. So that's what we want. We want to see this come back, and it did. If we can do this and pull back here, it'll help the market. That means money's moving out of bonds and other areas. And so we're looking for that. And this is probably a range here that we could get into. The reason is we got this pivot back here in June, which was a high in June. And so looking for that, maybe hit the support area somewhere in this range here. Maybe we can become range bound. On the 2-year yield, pulling back as well, almost tagged the 20-day moving average. We have a little bigger range area here because this was a huge breakout. So we really want to get down in this area and hold that 2-year bond if we want this market to continue rallying. So we're looking for hopefully a new additional pullback, but right now it's kind of stalled out right there. So we'll see what happens. Dollar continued pulling back, which is great. That's what we want. We're under the 20-day moving average now. I want to see that dollar continue to pull down here. And if they can get down into this other zone area, you can see we consolidated for some time here. That would be ideal. Or break down here into this range here where we had our last high back in July. That would be ideal. So, but we're right here, right on the support level. And this was our September 6th area. So see if we can get the dollar to continue to pull back, which, you know, when the dollar pulls back, gold skyrockets. And what a rocket ride. Holy cow, 2 days. Look at this thing. 1660 up to 1724. You know, 1752 is our next line in the sand. But wow, just blew right through the 20 and the 50. So finally getting some movement on gold. Just know that we have resistance up here on our lower trend line. You see these pivots right here. So we could find very well resistance here, you know, as early as tomorrow at 1744. And we got to break through that if we want to get to the next level, which is 1752. So we'll see. But yeah, nice run on gold. The VIX, you know, continues to pull back here. It tagged the 20, bounced off of it. We'll see if it can break through that 20 and pull down. You know, I like that it closed below 30 today. That's helpful for the market. So let's see if we can kind of hold that down here. If it bounces off this 20 and back up again, then it'll be short-lived and we'll probably be pulling back. Looking at this S&P 500 on the hourly, you can kind of see that we were kind of chopping here in this range, and we kind of pulling back here, which kind of creates this, you know, basically a falling wedge. And then boom, exploded out today, broke above that line, and had a nice little rally the last couple of days. So it's great that we broke out of that. We don't want to come back below 370. You can see that's kind of this line in the sand. So we don't want to come back below that. If we do, we're going to be pulling back to those lows again. But also we have this upper trend line here off of other pivots. And we do want to break through that if we can. 381.19 would be kind of the level we need to break out of. And if so, then we go to 389 would be next. And you see there's a big consolidation area here. So that would probably be resistance. So just be aware of that. So we'll see tomorrow if we can get more out of this. Maybe we get up here, hit our trend line, and bounce down. If we can, you know, have strong bulls, then maybe we can bust through that one. But just remember, those bulls bought at the bottom, they're going to want to sell towards the top and then drive this back down and pick up some more. So just be aware of that. So SPY on a daily, this is daily chart. You can see here, boom, right up here, up to the 20. So just something we're to keep an eye on, see if we can break up and start to move up. And if so, maybe this is a double bottom and we can start a rally up to out of this highs. Same with the triple Qs on a daily, just under that 20, under our resistance level. Need to really break up above that. We have a huge gap that left behind, but we'll see if we can, you know, keep this rally going on the triple Qs. On an hourly chart, you can see here, it was just kind of grinding down, and then boom, we busted out above these highs. So now we got to get, you know, really above this 200-day moving average to get rolling here to the upside. IWM ran up, pull back, run up here, and we could have resistance here around, you know, this 178 area. So just be aware of that. We have this huge gap down here, but we are coming up to this trend line here. Financials, huge bar. Look at this huge bar on here. So nice run up, rally up, just kind of blew right into through the 20. We're right on the 20 and holding above that. So if we can keep that level, you know, above really 32, and we can continue rallying up towards maybe 33. If we get below 32, we may be coming right back down and erasing some of that candle we just made. Bitcoin finally made a rally up here last couple of days. Got up the 50-day, also on this trend line here off these pivots. We'll see if they can hold. It may very well break back down. You see that it's kind of been coming in, putting in lower highs and lower lows. So we'll see if it continues to grind down, or does it give a chance to break out. And Ethereum just continues. It's trying now to get above. It's trying to get above this 20-day moving average. So we'll see if it can do that. You know, it's had a couple of days of trying to get, you know, moving here. Just really light. We really need to have light volume. We really need to get some volume pumping here if we want to see Ethereum kind of jump up. So just something we're monitoring as well on that one for an opportunity. That's our stocks, our cryptos. Definitely, you know, take advantage of joining us on our chat and daily watch list, and continue watching our videos, and hopefully they bring help to you. We try to add a little bit of training in there in the mix as well. We do have a free training out there, but I'd love to have you join us. And we'll touch base tomorrow night, see how your trades went for the day, and see what we need to do to plan for the next day. Everybody stay safe out there. Make sure you're taking profit along the way, and we will talk to you tomorrow.